Alrighty guys, welcome to a new video, and if you're still unprofitable, this video is for you. Just to introduce myself, my name is Ruben. I've been training for 2 years. On the screen here, you're going to see proof of payouts over the last year and a half from different prop firms, from Apex, from TopStep, from My Funded Futures, even one that's recently coming now for this month with My Funded Futures 2 actually. And these are the 8 or 9 things that I've done, maybe things that have changed, things I've implemented that have helped me go from unprofitable to profitable. With that being said, guys, let's get straight into this video. Let's go. Now, there's 8 things here, and the first one I want to cover is less is more. You've probably heard this before, right? You've probably heard people say, well, you should trade less, you should do this, you should do that. But for me, one of the biggest things that I've noticed is less is more is not just that. It's not just taking less trades. It's not just waiting for the A+ setup. That's all generic, right? Everyone's going to say that. But for me, this really stems down to things like risk to reward and being satisfied with enough. But how do you do that, Ruben? What are the strategies that you've used to implement to actually make this happen? Now, I'll give you a few examples, and we can talk about this week, because I think this week or the week that just passed, a lot of people have found this challenging. So if you're watching this video, you're probably sitting here thinking either, had average week or a decent week, but a lot of people are thinking, I had a really hard week, a really challenging week. Nothing ran to my full TP, nothing ran my 1 to 2, nothing ran my 1 to 3. We looked like we're going to sweep this higher, then we chopped around. And if that's you, also, this will be important for you. So realistically, when I'm looking at the markets, less is more is about taking what the market offers me, right? Being understanding that I don't need to take a 1 to 2 risk to reward. I don't need to always take a massive RR trade to have a profitable week. When I first started trading, guys, I'll put a few snippets on the screen here. I was always looking for those 1 to 2s. I was always looking for, those 1 to 3 trades. I didn't move my stop loss. I didn't do anything with it. I just let it run, either TP or stop loss. And what I noticed a lot of the time is that price action might go a 1 to 1, a 1 to 1.5, and then it would reverse on me. And I'd be sitting there thinking, why didn't I just take my profits off the table? So what do I do? How do I get around this? And what have I changed? I'm a big believer in taking partials at a 1 to 1, as long as the partials are at least 10 handles, guys. I'm not going to take something that's 5 handles. If my stop loss is 5, I'm going for 10 handles. If my stop loss is 20, I'm going for 20. And I'm using this as a baseline for my model and for my strategy. Now, not only is this going to help you prop firms, by the way, we'll talk about that, but this is going to help you control emotions. It's also going to help you take some money off the table. And then if the price wants to run, then you let it run. Keep that in mind, write it down. If the price wants to run, then you let it run. So for me, less is more means taking less from the market and being satisfied, and understanding that you can take your partial at 1 to 1, like I've said here, and you can hold a runner if you want to. You enter with 2 contracts, for example, you can take a partial at a 1 to 1, and then you can hold a runner for a 1 to 3, a 1 to 4, whatever you need to, guys. There's no limitations there, but this is a really important concept to keep in mind. And then again, on the screen here, I'm going to show you a trade that I took this week where it was 1 loss and then it was 1 win, right? 1 loss and then 1 win. And I think a good thing to do here now would be to actually have a look at what trades I called for the Discord this week during the London session for the premium community, and how this would have worked out, right? How would it have worked out for the overall risk reward? What if we're risking 200, 400? Because this is a really important concept to talk about. Less is more in the markets. Write that down. Aim for less. You're often going to be rewarded. If you're always aiming for too much, not every market condition, here's the reality, not every market condition will actually yield something good like that. It's not going to do that. So if you take less and the market runs, great. If you take less and the market doesn't run, also great, because at least you've paid yourself. Perfect for prop firms, perfect for trailing drawdown, perfect for psychology. This is what works for me. And if you're struggling because you're always seeing price come close to your TP in reverse, this could be the way forward in terms of risk management, which we're going to talk about in more detail in just a second. Alrighty, so let's go back this week. Let's have a look at Monday, Tuesday, Wednesday, and Thursday. These are the trades that I mentioned to the Discord, and let's keep that principle in mind. Less in the markets is more. Now, on this particular day, I saw price come back down up here into a level of OTE. I'm looking for longs, we're in discount, I'm looking for longs. Now, price reacted twice, and there was 2 call outs that I made here. depending on how people manage risk, it could have been a break-even day. It also could have been a small winning day. That's important. So this first trade idea here was a long position from roughly about here. The second was a long position from here. And you can see how choppy the market is. It's up, down, up, down, up, down. It might originally, push up to that point, but you might have to sit through that chop. Is that something I want to be a part of? No. And if I get stopped at break even, or if you get stopped at break even, it doesn't mean that your strategy is wrong. It just means that the market conditions on that particular day did not suit your style of risk management. But it doesn't mean it's wrong. We'll talk about that. So 2 trade ideas here. If you're greedy, if you have an ego and you're going to sit here and say, every single market condition, this is the truth, every single market condition has to suit my model, has to suit my strategy. The harsh reality and the harsh truth, guys, is that you're going to get wrecked in the markets. Your psychology is going to be messed up because you won't be able to look at the markets and look at what they're actually telling you. The candles can't lie. My ideas, your ideas in the market, they're just simply ideas. If the candles are telling you that they're not looking to go higher just yet, why not take a partial and be done with it? But that's okay. And even if this was a break-even day, guys, that is completely okay. Please, 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 please keep that in mind. A break-even day is not a bad day if you followed your rules, and the same with losing and winning days. Now, Tuesday here was quite interesting. There was 2 ideas, both were long positions. The first long position here was an interesting idea, but it would have been a losing trade because I saw price accumulate, manipulate. Obviously, we're doing the macro, and then we invert this fair value gap here. Now, here's the thing. I want to talk about this. A lot of people are going to sit here and say, well, how is this first one a losing idea? Because normally a stop loss for me would be placed below the bodies. And some people are going to sit here and say, well, why didn't you place the stop loss below the low, Ruben? Why did you actually leave the stop loss here? Because that's what my risk management protocol suggests, and that's what data collection suggests for me. Now, for you, you could be different, and on this particular day, that first trade could have been a winner. For me, I had to take this first loss, a second win, back to break even again. Less is more. I'm not trying to hold this trade all the way up here. I don't care that price ran all the way up here. And that's the mindset that you have to adopt as a trader if you're going to succeed in the markets, guys. If you demand too much from the markets on any given day, you're going to get wrecked. And a lot of people struggle this week, I think, because they were looking for these big pulls and maybe they saw price come up here, so they got stopped to break even, right? I was already out up here. Or maybe some people, took a partial, took the full TP, and they're like, oh my gosh, price ran up another, 50, 60, 70 handles. But who cares, guys? That's the mindset you have to have. You have to have a winner's mindset. We'll talk about that later. You have to manage risk. And if I take a loser, my next trade, my next goal for the next trade is to come back to break even. And then if I want to trade later on, I can do that. So this day here would have been a break even day. The first day was a winning day for me, but I actually came back later on and I traded this macro here, right? This macro here. So I took a nice short. We'll talk more about that in the future. So this is 2 days, right? 2 days already. And you can see that based on risk management, based on the principle of taking less from the market, you are going to be rewarded in these in these conditions. Simple as that. Wednesday was pretty cruisy. Wednesday in the Discord was nice and easy. So I'm hopping on now at 1:40 a.m. and we'll pretty much stay on for at least an hour and a half, sometimes longer. This is a very long call. But you can see here that, the first idea was a winning trade. We swept Asian sell side. We created the inversion gap during the macro and we target at least a 1-to-1. We go to break even, get stopped out. Who cares? Now keep in mind, once you take a winning trade, guys, you're done. I'm done. I'm not coming back on my account and I'm not taking other trades. I'm not putting probability against me because we had a winning idea, 2 losing ideas, and then a winning idea here. So what trade you take and the outcome of your trading day will depend on how you manage risk and also when you come in the markets. You cannot change probability. You cannot change what the market wants to do. You can just put yourself in a better position or a higher chance position to succeed in the markets. So Wednesday here would have been a profitable day for those that came on the call. Monday or Tuesday should have been based on risk management. And then if we move on to I think this is Thursday, so the last day, there was a nice little, short scalp. I was looking for lower prices. There was low resistance down here. We're in a macro here. We had this inversion gap, winning trade. But can you see how some people, if we go back to this flow chart now, some people in these market conditions are saying, well, I didn't have a profitable week. You're not following this. And this is just what works for me, because less is more will get you out of the tricky situations when the market is choppy. It's as simple as that, right? And this is going to be a very long video because I want you guys to watch the whole thing, take notes, because this is reality. I've had to experience all these things. I've had to experience, all these, things go wrong in trading. I've learned from that. And this is the protocol that I've put together. The first is less is more. And that's just an example of what I call with the Discord, how I manage risk with the Discord, and how an average week for a lot of people, or a choppy week for a lot of people, can actually be a profitable week if you target less and you understand that the market is not always going to give you those massive expansive moves. Those expansive moves, write this down, those expansive moves are a bonus, guys. They're not a must, they are a bonus in the markets. Alrighty, so point number 2 is anything works when it works. This is my quote, this is my saying, and it's taken me months and months and months to, I guess, really implement this. And when I first started learning, I always thought that there was one best strategy, and then every other strategy was wrong. Mine had to be the best. ICT has to be the best. Trading the, fair value gap breaker model has to be the best. The reality of the situation, guys, is that anything can work when it works. And that's just the reality of it, right? So for me, I trade the macro inversion fair value gap model. You might trade the 2022 model. You might trade the CISD model. You might trade something different, support resistance. Anything can work when it works. I think a big part of trading is, in a sense, growing up in the mind and realizing and accepting that your strategy is not better than someone else's. They're the same, but when applied to the right context and when you get good at doing that, that's what makes one strategy more profitable than the other. And that's an individual thing from person to person. This also applies to risk management, right? So a lot of people say, well, this week I got stopped at break even, then it ran to my TP. On some weeks, guys, your risk management model will favor the conditions. On other weeks, it won't. But if you can have with greater than 50% certainty or chance your risk management protocol playing out, that is something that you should be keeping, right? One losing day or 3 days in a row where you get stopped at break even, it runs to your target is not an issue. If it's happening 5 days a week, 2 weeks in a row, 3 weeks, of course. But a couple times a week, it's not an issue. You just got to come back from that and understand that every single market condition is different and anything works when it works, right? Any strategy can be profitable, the ICT teaches. People are profitable using the 2022 model, inversion model, turtle soup model. So it's not the strategy, it's you. And that's going to be the next point. It's not the strategy, it's you. I think a lot of people, they want to blame the strategy. They want to blame the market conditions. Oh, this week the conditions are so bad. That's why, I didn't make money, or, oh, it must be the strategy. So what ends up happening, and I'm lucky I didn't do this too much, but what ends up happening for a lot of people is they might start, for example, you might start with the 2022 model. That might be what you start with. And so you start with this, right? You collect some data on the 2022 model and you might have a bad string of trades. So you lose 3-4 trades in a row. Oh, the strategy must not work. Or you might have a bad week where maybe it doesn't appear too much. The strategy must not work. Now, the thing is, it's not the strategy. Yes, you need a strategy that is flexible in the market. You need to have, in my opinion, a base strategy. So for example, for me, it's the macro model. And then from that, think of the macro model as the tree trunk. And then I've got branches of that, of that strategy that I teach in my premium Discord that I use myself that allow me to apply that strategy in any market condition, right? And a lot of people, they get caught up because they go, oh, it must be the strategy. It's not the strategy, it's you, right? You have to be adaptable. You have to be flexible. But if people are profitable using these models, like I said previously, it's you guys, it's you, or it's me, right? So the only thing holding me back was me. It's not anyone else. It's not the strategy. It's my risk management. It's my psychology. It's my overtrading. It's my fear. It's my greed. It's my poor lack of risk management. It's my, targeting too much, trying to impose my will in the markets. All these things are things that make people unprofitable for longer or stop profitability from being consistent in the market, guys. It's just reality, and it might be a harsh truth to hear. You have to accept it. You have to be able to step away and say, look, what do I need to work on? And if you're not sure, some of these other things in the video, I'll go into a little bit more detail in. It's you, and you are all those things. Risk management, you are the edge. You watching this video now, whoever you are the edge in the market. The strategy is not the edge. Anything can work. Any strategy can work. You are the edge because you are determining when you're going to implement that strategy, how you're going to implement the strategy, how you're going to take profits, how you're going to mitigate your stop loss, what you're going to do. It's you, it's me, and that is what the edge is. A lot of people don't understand that. It's not the strategy. Let's move on. Alrighty, so what you're seeing on the screen, guys, this is what I'm going to call the triangle of success in terms of risk management. And I just want to preface this by saying each of these variables can be modified, and each modification will have an impact on your results in trading. Also, I want to say that there's not one right or wrong way to do it, right? So risk to reward is number one. Number two is the average loss or the average winner. And number three is the win rate. Now, I just want to go through a few examples here because a lot of the time, people don't consider these things. This is the reality of the situation. So take a look on the left-hand side, right? Trader one versus trader two. Trader number one and trader two, they both have a 50% win rate. They both go for a 1-to-1 risk to reward. What's the only difference between trader one and trader two? Trader one does not move their stop loss. They go for a $200 win and a $200 loss. They're break even for the week. And you might be stuck in this position. A lot of people I talk to are the break even traders. And for you guys and girls, it's because of risk management, in my opinion. It's risk management because you might actually have a profitable strategy. Again, it's not the strategy, it's you, but you're not implementing that in the correct way for the way your strategy should be implemented, which we can talk about. So trader one, trader two pulls out a profit of $200 for that week. And the only difference they have is that they've reduced two of their losing trades by half. And that reduction in losses has allowed for this trader to actually have a profitable week. Now let's take that a step further here. We've got trader one already, we've talked about that. We've got trader two. Trader two is already profitable, trader one is break even. But how do you become more profitable? What are the things that you can change or that I've changed that have helped me? Now, for me this week, if you're curious, I'll get this on the screen. My win rate for the Asian session has been much better this week than the London session, right? Just so you know. Last week, before that, it was different. They've kind of swapped. One week it was 83% for London. The other week it was like 60 something for Asian. And now we've swapped. And that happens, right? This is just saying that someone has a 50% win rate. And this is realistic for a lot of people. You don't need a high win rate. Some weeks are going to be better than others. Keep that in mind. But why does this person here have a profit of $450? What's the key difference now? Have a look, right? Now have a look here. Trader two versus trader three. They both still have that 50% win rate. They're both still going for a 1-to-1. They're both taking 10 trades. But now this person has left this the same, but they've changed the average win. And again, back to that pyramid we talked about, we've got risk to reward at the top, the win ratio, right, or the win rate, and we also have the average winner and loser. So now what we're doing is we're modifying two of those things. Again, it's a triangle or a pyramid. And because of that, this person profits $450. Now, these could be three different people, A, B, C, 1, 2, 3, in your community, maybe people you know in my community. And even this week, speaking of the trades that I talked through with the Discord, this could be the outcome. Talking to a few people, people have been around that 67% win rate because of the fact they've done these things. So risk management for me is something I had to learn the hard way because I thought that it was just the strategy and it wasn't me. I didn't take accountability. You have to take accountability. And I didn't really play with the numbers and understand that the market is based on probabilities, guys. That's all it is. Probabilities drive the market. But there's more. Let's get into it. So we talked about trader one, break-even trader. A lot of people are there. All you need to modify in this case is your average loser. If you want to become more profitable, keep that the same and just increase your average winner. And then you can see here, if we leave the average winner the same, we leave this the same, and now we increase the win rate. Again, we're changing those pyramids. We're increasing different things, right, on that pyramid, that risk to reward pyramid. I'll get that on the screen here for you guys, just so you can reference that. Whenever we change the risk to reward or the win ratio or the average loss and win, that's what's going to impact the profitability. So you can modify one, you can modify two, you can modify three. Each will actually do something good for your, for your trading and for your account balance. So this person here increases the win rate by about 10%. And they now have $900 profit taking the 10 trades. Massive difference, right? Someone is ending the week saying, I've moved nowhere. This person's saying, well, I've had a really good week. And imagine you have a better week in terms of win rate. Imagine if, right, Obviously this risk to reward, I'm going to change this as 1 to 1.25 RR. But imagine if, right, this person here, trader 3, trader 2, whoever it was, imagine if they increased their risk to reward for the week to 1 to 1.5. Because maybe on a particular week, the runners run. But this just illustrates that even on a horrible week, on a really bad week where all you get is a one-to-one trade this week, right, where a lot of the trades are one-to-one, if that was you, then in this situation, what's going to save you, it's going to be how much you mitigate your losses. And that is another one of these 8 things. How you mitigate losses will change the game for you guys. How do you know when to mitigate losses? People are going to ask me, right? How do you know, Ruben, to move your stop loss? Well, there's a few easy ways to do it, right? And let's talk about that now. Number one, what's one way to do it? If you are aiming for a one-to-one risk to reward, if price is about 0.9R or 0.8R, then move to break even, right? These are simple ways to do it. I'm not saying this is how you should do it. These are simple ways to do it. Number 2, if price is chopping around, consider reducing your stop loss. Now, what does that mean, reducing your stop loss? Like, what kind of situations would warrant that? For example, let's go through, and let's talk about some, trade examples from the week. Just examples from this week. Even we can use yesterday's price action because I didn't have a call yesterday with the Discord. But let's say yesterday during the London session, right? Or even here, let's assume here, right? This here is a macro from 1250 or 1150 to 1210. Now, you might see this inversion. You might enter a long position from here, right? Your stop goes below these bodies. Now, again, you get a one-to-one, you're done. Less is more. But for those that maybe want to go for a high risk to reward, or maybe you're looking for something more, then what I would personally do, this is me personally, as price starts to do this, you'd expect price to respect this gap and then push higher, right? So when you see accumulation like this, you want to see price pretty much push higher very soon. So price is like this, your stop loss is here. I would personally mitigate my stop loss a little bit when price pulls back because I want to see this inversion gap hold. And if it doesn't, the chances are, again, what happens here, we break past it, the chances are we're going to move much lower. It's just how it goes, right? So those are 2 things you can do in terms of how to manage risk. Number 1, if it goes a 0.9 or 0.8 risk to reward, you can go to break even. But if you want to reduce that average loser, these are ways to look for it, right? Sometimes you won't need that to happen. There's a macro here from 1250 to 110. You won't need to mitigate losses because here we just spool up. But again, what can we do? There's an inversion gap formed right here. Let's assume you take a long position. Again, write this down from here. This is important. This is the important part, right? No one talks about this. Do you really think, right? Here's the question for you. Do you really think if price were to come down all the way here, would you be saying to yourself, I'm still bullish? Or would you be saying to yourself that price action is probably going to move lower? Ask yourself that question. If price came down here, do you really think, right? Do you really think if price came here, that price would move higher based on your understanding of market structure? And this is another thing about stop loss placement too. In reality, guys, I wouldn't want price to go down there. So my stop loss is going to go below this down close candle, which is an order block. What does that mean? If I've got a tighter stop, that means I reach my one-to-one partial area much sooner. And then once I reach my one-to-one, whenever I take a partial, I'm moving my stop loss to break even. If price pulls back and stops me out and runs to my target, who cares? And if price expands high like this, say this was a trade I took, which is not, but say it was, then I would hold, here's the thing, I would hold to this buy side liquidity. And most of the time, again, less is more, I would be finished up here, satisfied, and move on. Be satisfied with enough. It doesn't matter that the market ran all the way up here. It doesn't matter, right? And this is going to lead me into the next point on the chart. A lot of people need to accept that my way or your way of doing things, it's not right. I'm not right and I'm not wrong, and neither are you guys. So we talked about different ways to mitigate stop loss, different ways to reduce stop loss, either by taking a partial as we approach the target. Now you might see someone here in my Discord or on YouTube, whatever, and they might have held a trade that you didn't. And a lot of people get concerned about that. They're too focused on other people. Stay in your own lane, focus on yourself. That's a really important thing. Too much focus on other people, you're gonna get distracted. Now, it's not about being right all the time, but it's about understanding that it's a game of probabilities. I preach this all the time in my Discord, right? If you're too focused on the money and you're too focused on the little in-between things, you're not going to focus on the fact that the market, yes, it may be run by an algorithm, but the string of trades that you get is based on probability. And that depends on a few factors. When do you hop on the market? And on that particular day, how you seen the market. There might be external things that influence you. For example, if I've had a really good day the day before, the next day I'm approaching the market with a fresh lens, but I might have a little bit more confidence versus I go bad on one day, the next day I might be a little bit more cautious, and that's completely okay because that's risk management. And accepting your way of doing things is not right or wrong. It's actually just based on probability. You can't change that, guys. My idea, your idea in the markets will not move the markets. I'm not a market mover or maker, neither are you. Keep that in mind. Now, before we move on to the next thing that has turned me from unprofitable to profitable, I know there's a lot of things here, but these are the important things that have helped me. If you're still watching this video, give this video a like, but also comment down below because I'll know who you are then. Comment down below here, ICT macros. And I say that every time. It's a little word in between, right? So I know who's still watching. There's not much editing going on in this video. It's me speaking from the heart to you guys, because I work with a lot of people, both one-on-one, I do coaching, but also I help some friends that I've got too. And a lot of people face the same things. We're all in this together. That's an important point. And everyone faces the same struggles. All the psychological stuff that you guys face, I face. I'm a human, you're a human, we're not perfect. So stop trying to aim for perfection, really important, and just aim for something that's repeatable in the process. Again, anything can work when it works, and think of that probability. But the next topic I wanted to touch on was a really important one. It's a really important one here, and let's just discuss it now with the charts on the screen here. You have to risk money. You have to risk money to make money. It's as simple as that. A lot of people have that fear of, what if I lose this? You're not ready to start trading, right? You need to be trading from a position. You need to trade from a position where you don't need the money. You need to trade from a position where, say you quit your job, it's not a good position to be in because now you're relying on that money to pay for certain things. The same would go for this, right? If all you have is one funded account, and in your head, if you're saying, if I lose this funded account, I can't afford to buy another one, take time to focus on practicing the skill. Don't rush the process. Focus on those other financial things first, and then come back to trading. So you've got to be in a position where it's like investing, right? If you invest money, you're willing to lose it. It's the same thing with trading. You can't come from a fear mindset because you have to risk money to make money. And for me, a lot of people have asked me this. Some setups, right? Some setups for me are going to be high risk. Now, on the screen here, you're going to see something, right? On the screen. You're going to see a trade that I took, a screenshot I took, I posted it to Telegram, whatever. This is from here, right? And I took a trade here that was, in my opinion, extremely A+. We'll talk about it. We'll go for a little walkthrough here too. So I risked a lot on the trade. I risked a lot on this trade as opposed to a typical trade. And you might say, well, that's a bit silly, but for me, risk is on in certain situations and risk is off in certain situations. You have to let your winners run and you have to let your losers get cut short. It's something everyone talks about. Everyone talks about this, and this is where the market confidence comes in and the time comes in. Some things, guys, can be shortened. So if we work one-on-one, if you work with another mentor, watch YouTube for free, my YouTube, this channel, I can fast track, even through YouTube, I can fast track your learning. So many people, it's great to see, use what I've taught on YouTube and they're succeeding. I can fast track the learning, but one thing I cannot fast track is your market experience and your intuition in the market and your instinct in the market, guys. Back testing is great, but live market reading develops your instincts, right? And live market reading exposes your flaws, and those flaws are things that you need to work on. For me, there's things that I work on every single day and any trader works on every single day. But why was this such a good trade, Ruben? Why did you risk so much? Why did you go high leverage on this? And why did you hold runners on this trade when you talk about risk is, less is more, sorry. It all comes down to, guys, the fact that some situations are A plus and other situations are not A plus. And this is an example of an A plus framework. So jot this down if you're still here. You get this extra bit of information. I'm happy to give it to you guys. Let's go back to replay mode right here. And I want you to look at this pattern, write this down. You can see, right, price has an impulsive move up and then we slowly work our way down. When we work our way down, we're generating low resistance buy side. And if we go to a 15-minute chart, look at what price is actually delivering from. Look at this, right? Let me just zoom across here. Look at this really lovely, nice, clean 15-minute fair value gap right there. So price is delivering from a fair value gap, a 15-minute gap. I preach this is what I like to use. And what else is price doing here? Right, if I draw a fib from this swing low to this swing high, we've also tapped into optimal trade entry. Maybe write that down, guys, A plus it up. Now we go back to the 1 minute time frame and you can see here, we're respecting optimal trade entry when we actually tap into it here. That's in the macro. So as price comes back down again, what do you think I'm marking out? I'm marking out the swing low to the swing high and price taps onto OTE. Now I'm waiting for an inversion gap. We get that gap and I'm looking for price to trade higher. Simple as that. It's 6 minutes before the macro. That's completely okay because I want the macro to spool. Write all these things down, guys, because I'm not going to give, this type of information away all the time. I've got heaps on YouTube, right? But this is an A plus setup, an A plus framework. It won't happen every day, but when it does happen, I'm going to risk a lot on these setups because my data collection supports it. And what do I do when I risk a lot? I take a base hit. Like I was out of the trade, I think somewhere up here. Like I entered here, I was up, partial right here at a 1-to-1 risk to reward. And then the rest, I think I hold the rest to roughly about here somewhere. So I've now squeezed that trade again by understanding market conditions, by understanding how, A plus setups work and probability and chance. I've squeezed what would normally be a 1-to-1 risk to reward. I've taken my partial. I'm fine. If I get stopped at break even, who cares? I've squeezed more juice out of it. Like I think it was like 60 handles. I've squeezed more juice. So when you account for that, your risk to reward, back to that triangle again. Let's get this back on the screen. Back on the screen, you have a look, right? That triangle, triangle of risk management, I'm now affecting, right? I'm now affecting the risk to reward on the trade. So if my initial trade was something like this, right? Entry from here, stop below these bodies. I take a partial at 1-to-1, which I think, is about here on this candle here. I took a partial. I move my stop to break even. My next target was up here, right? A 1 to 2.5. You take the average of that, of those two, partials, 1-to-1 and then 1 to 1.25, your risk to reward will increase. So if the market was to stop me out at break even, who cares? But at least I've taken a partial. But if the market wants to spool, because again, we've got all the low resistance, we're in a high time frame gap, all these things come into play, then I'm going to take that trade with high risk. And what's higher risk, Ruben? Each to their own, right? Each to their own. So higher risk will be different depending on, do you have a buffer? Do you not have a buffer? Whatever it might be, because everyone's different. I'm not saying every trade I do is high risk, but for these trades, the contracts are getting stacked on. And if I risk more than $200, $300, $400, $500, I am completely okay with that based on my account balance and based on the trade that's set up. But again, you have to risk money to make money. You have to have confidence. You can't be trading from a fear mindset. Otherwise, everything will be based on the money, instead of looking for the quality setups. That's my best advice in regards to what we just talked about. Now, next topic I want to talk about is a loser and a winner are good and bad in their own respects. And this is going to tie into journaling, a really, really important topic that a lot of people want to know about and a lot of people are curious about. What do I do when I take a loser? What do I do when I take a winner? Now, I want to start by saying this. If I'm following my model, then I'll do very little, right? Let's just start by saying that. If I'm following my model and I take a loss, I've followed my model. I've got data collected on it. In my mind, what I literally think in my mind, this is reality, right? I think, oh, well, it's probability. There'll be a winning trade tomorrow or the next day. That's the mindset, the winner's mindset you have to have. You cannot dwell on things for too long. You can think about it, you can reflect on it, of course, but you need to move on. How do I journal? People ask, how do I journal? What do I do? How do I collect statistics? I'm gonna get a snippet on the screen here of some stats from the last 2 weeks for me, right? And this will show you the win rates from different weeks. Just a Google sheet, it's a very simple document. So you can see it on the screen here, and you can see that, obviously 1 week Asian session performed good, the other week London session performed. And these are actually on funded accounts. I do take other trades on evals, right? But I'm looking at more so the funded accounts that are making money, right? And that are working towards a payout or that have reached the payout stage. So not every week's going to be 100%. And these last 2 weeks for me have been good. As a scalper, they have been good. And that brings back to the point of less is more, guys. And then if price wants to run, let the price run. What about journaling, Ruben? What do you do for journaling? Well, here's an example of some trades I've journaled. This is from about 2 weeks ago. I take screenshots. So for example, this trade here, if we look at it, this trade here was a winner. If we just move this across, and what you can see is that, I took a long position. Let's move this across a little bit. Took a long position, and that was during the macro from 250 to 310, right? So I took a screenshot of that, that's fine. If we go back to this one, this was an interesting day. So I took 2 losers to start, but again, because of risk management, reducing my average loser, I was still able to come back for this third trade. And that third trade brought me back to break even and into a little bit of profit. Now, did price run more than that? Look at the chart, like we did, like we shot up. But again, I'm not trying to have a massive winner after I've taken 2 small losers. This is just how I go, right? And this will keep your account balance in check for longer. This will help you with psychology, and also it'll help you with patience, because again, a winner and a loser are both good and bad. These winners followed my rules for me personally, and you should be thinking the same for you guys, for yourselves, right? If it follows your rules and you take that trade and it loses, it's okay. It's okay. Doesn't matter. It doesn't mean that your model or strategy doesn't work. It doesn't mean that, you have to change something. It doesn't mean that because I took a loss here and someone didn't take a loss because they didn't move their stop loss, it doesn't mean that I'm wrong or they're right. And the same if that happens for you guys. Doesn't mean that. It just means that probability did not play out in your favor, and there'll be another trade later on. But you can't let these things cause turmoil in here. You can't let these things ruin your week or ruin your day. And risk management will save you in situations like this, where initially I tried to go short. I had the wrong idea. The market told me very quickly. Then I tried to go long, but as price pushed up here, I was expecting a quick move up. I was expecting that based on my data collection. So because of that, I moved my stop loss below this body. If I'd left it where it was, would I have been stopped out? No, but that is the chance I take, and that's a risk I take based on my strategy. And you guys will have the same thing for you guys, like based on what you do with risk. And we talked about ways to manage risk. Like for me here, if I just have a look at price action, as price pushes through, I'm entering here. We've got another massive green candle here. Realistically, right, if I move this across and there's these swing highs over here, right, I want to see price push to that point. So I'm going to reduce my stop. Like we have 2 big candles. It makes sense that the market should push through. A pullback can happen, doesn't always happen, but these are things that you've got to accept. Acceptance is the biggest thing, guys, with trading. If you can't accept that this is going to happen to you, if you can't accept that, some days are going to be good, some days are going to be bad, you're going to have those situations where you're going to go on tilt. You're going to think that your whole strategy is wrong, and you're going to try to fix things that aren't broken. It's as simple as that. This is one here, really A+, 15-minute bullish gap, taking a trade here, 2 minis. Again, higher risk. Why? Because it's an A+ setup. Partial here, and then we've taken a runner contract off here. And you can see this is how I do it. So this is how I journal. This is how I kind of make things work. And I journal all my trades like this. Wins, losses, everything in between. I create a data sheet for all the trades that I take. And from that, I actually just look at it, reflect on it, and move on. I'm not trying to aim for perfection. I'm not perfect. No one's going to have a 100% win rate for weeks on end. It might happen 1 week, for 2 weeks, 3 weeks, whatever, but not for weeks on end, because the market is all about probability, and it's about putting yourself in the best chance or the best probability seat to win that trade. And if you lose a trade and you follow your rules, move on. You don't need to fix anything. Please, 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 please. You don't need to fix anything if you have a losing trade and you follow your model, because that's going to cause you to go into that cycle. I need to fix something. I need to figure out the market, how the algorithm works. I need to figure out every single thing that the market's going to do every single time of the day. No, not reality. And if that's you, go for it. But for me, I was in that position trying to figure out how the algorithm worked and how it turned and how it did this. And I think unfortunately it's the community that we're in that makes it seem that way, that you should be doing that. But the best traders, guys, have the simplest strategies and they repeat that based on probability. They don't win all the time. And that is just the truth. Speaking from the heart here to you guys, that's the truth. These are some things that I wish I did sooner. And these would have made me much more profitable much sooner, because it was all in my head. Now, in this video, if you're still watching, I wanted to discuss prop firms. And potentially this could be my longest video, I think, but it's a good one because I wanted to make it realistic for people. And I have a lot of passion talking about this because I wish someone would have said this to me when I was still learning, when I was still unprofitable, when I still wasn't taking out payouts. I wish someone would have said these things to me, and all these harsh truths, but the reality of it, right? Some things you can change quick, some are going to take a bit longer, and that's how it is. Always focus on that growth. But I thought maybe we could have a bit of a chat about prop firms here, because a lot of people ask me, like, how do I, approach prop firms? What do I do? Now, every prop firm has different rules. So a lot of people I've seen both in my Discord or just online, they like to complain about what prop firms do this and that. But in my opinion, just accept that they have rules and you have to play by the rules. And the rules can be played by if you think about probability and chance. Now, most people use prop firms like, Apex, My Fund of Futures, or Top Step. Over the past year and a half, now I'm using mainly My Fund of Futures. But realistically, these are the prop firms that a lot of people use, and these are the prop firms that I trust and that I'm going to continue to use. More so My Fund of Futures and Top Step. Now, here's the thing, and I've talked to a few people about this. You want to look at each prop firm and you want to look at what needs to be done. Here's the important thing. What needs to be done if you were in a funded account to achieve a payout. And let me explain what I mean. If you're with Top Step, you need to have 5 winning days, right? So you need to have a total of 5 winning days, and they need to be at least on a 50K account, right? $200 per day. What I would be doing if I could go back and start again, right? I've left this to the end because, if you're still watching, you get this. If I could go back and I could approach it differently, I would start an eval, right? And I would try to simulate this as many times over and over and over and over and over and over and over again. Now, the same thing here applies for My Funded Futures, except I think it's less than 200. It's like $100 is a winning day. So this is Top Step. This here is for My Funded Futures. Say, for example, a starter account, which is even less. I love My Funded Futures. Really cheap, really good rules. So if you're with Top Step here, try to simulate this, right? Try to simulate this in an eval. And this is going to take time when you're still learning. In my opinion, if you can make $200 across 5 days, it doesn't have to be back to back, right? But if you can get to the point where in any given month, you can make that 5 times 200 in 2 weeks, multiple months in a row, you're ready to go higher risk. This is what I do, higher risk on the eval, and then drop it down if you want to for the funded account. Right, so say for example, in April, right? We just started April this month. Say in April, for example, it takes 2 weeks to reach $1,000 in your balance, which I think is very reasonable. And then let's say by the end of April, you're doing this risk in an eval. In the end of April, you've got $2,000. And then 2 weeks later, you've got $3,000. Obviously, you're going to pass the account, right? Naturally. But if you can simulate this for at least 1 month, 2 months, then I do believe that you are ready, for me, if I was talking to myself, again, not financial advice, to risk a little bit more in the eval to pass it quicker. And then if you wanted to, you could drop it back down to this. Because you want to simulate the conditions for the payout in the eval, and then you want to pass the eval. Because why waste time? Here's the thing. This is the reality. Why should I waste time in an eval when I know that I can get a payout with the conditions. And the same could be for you guys. If you can prove to yourself multiple times that you can simulate these conditions in a funded account, then you can consider doing things with risk management, trying to pass accounts quickly in one hit, whatever it might be, and then you're good to go. Even easier for my funded futures starter account, even easier, 5 winning days of $100. You know how many testing weeks you could do on this with one account? Risk, I don't know, $70, $80, risk $80, risk $90 per trade, and aim for 100. If you can do that multiple times, then why not, right? So if there is a 1 day pass, here's the thing, if there's a 1 day pass on a funded account, I'm going to utilize that on A+ setup. So those examples I talk through, like in this document here of A+ setups, my journal, these are things that I try to use to pass accounts with in one go, especially my funded futures. I'm not there taking 3 weeks, 4 weeks to try and pass an account. Not going to happen. I'm accepting probabilities, and even with Top Step, if I was going back there, which I am soon, even with Top Step, right? If you can pass in 3 days, I'm going to pass in 3 days, or I'm going to fail in 3 days. But I'm going to accept that the trades I'm taking are going to be A+ trades. The risk is going to be on for those trades. I'm accepting the risk that I'm putting on before I take that trade. And that comes back to the point of you have to trade from a place where you're trading from probabilities and not for the profits. If you're trading purely because, I need to make this money, you're not going to perform good. It's just how it's going to be. You might have some lucky streaks, but you won't perform good consistently. And those kind of situations might apply to you, anyone watching this video. You need to take a step back, just focus on learning for a couple months. Get everything sorted for yourself, and then come back to trying to trade a funded account. If you focus on a couple months of learning and trading demo, you're still going to improve as a trader. You're still going to improve, right? You're still going to be doing something. Or you could do something like this where, for example, let's go back here, where you just simulate this in a real, situation for a funded account. So this is the reality of prop firms, guys. Like, it's a game with prop firms. It's a game, and you have to play by the rules. There's no use complaining. Follow the rules. The rules are pretty lenient, you know what I mean? And I've achieved payouts doing everything. Like, I've done big hits and then just cruise to the payout. I've also done consistent, hits, say on the My Funded Futures milestone accounts based on consistency rules, and they both work. And that's what I'm saying. Like, anything can work when it works, but it's about finding what works for you and what works for when you can trade and what you can do. And just another point on that, guys, just another point, right? Let's say this, for example. Let's say you buy 4 Top Step evals or 4 My Funded Futures evals. You pass 2 and you fail 2, right? Now, let's say per account, it costs 200 Australian dollars. I'm from Australia, so we'll use that. You spend in total $800 and you've lost 400, right? Now, with the 2 funded accounts, all you need to do to make back the money you've lost is to literally make $400, which for most prop firms, you need to actually probably take out around that amount to qualify for an account. So if this is you, even with a 50% strike rate from getting evals, when you get to that stage, when you're ready to go high risk, if you get a payout for, 400 US, which in Australia converts really nice on one account, and the other account you get a payout for 200 US, well, guess what? You've paid back for your losses and you're profitable for that month. Prop firms are not personal accounts. Stop treating them like personal accounts. Personal accounts are much different. That's another topic for another day. But prop firms are a game, and prop firms have rules. You play by those rules, you capitalize on the rules they have, and you follow the system. It's as simple as that. But if you're sitting there and you're saying, well, I don't want to do this. I don't want to waste money, quote unquote, to try and pass accounts, or I don't want to have that loss incurred. There's 2 ways that you can go about that. And the safest way would then to be, okay, I'm not going to do that, but I'm just going to take it slow and steady. Take it slow and steady. And you can do that too. Take it slow and steady, slowly build it up. And then once you come into the funded account, keep doing exactly the same thing. If that's going to be you, and again, I'm just talking about what I do, but if that's going to be you, you just have to accept, guys, that it's going to take time. It's going to take time. And if you're not willing to submit to time, if you're taking it slow and steady, then trading's not for you, because you can't have the best of both worlds. It's either you sacrifice a little bit of money, but you pass quicker, or you sacrifice time and you pass slower. Each to their own based on your own circumstances. There's no right or wrong again. It's just based on what you like to do. With that being said, guys, I want to conclude this video. If you've watched until the end, I appreciate all the support again. The YouTube channel, the Discord, Telegram. I appreciate everyone's support, and I'm here to make life easier for you. Now, if you want to join the free Discord, the link to that will be in the description below. I'm also going to have a discount code for my premium Discord. Every week now for free, I have community calls. So there's actually one coming right now in about an hour, 15 minutes time. That's what we're going to do as a community. So keep an eye out for that. And again, guys, these are the things that I have really used to, bring me from unprofitable to profitable. And I'm going to leave you guys with, I think it's 8 or 9 tenets, right? 8 or 9 tenets of profitability that I've come up with that I think will really help you out. I'm going to read them out on the screen right now. Number 1, this is the winner's mindset. Number 1, a winner doesn't give up, right? No matter how hard it gets, you're not going to give up. You have to have that, that utter belief in yourself that you're going to succeed. Number 1. Number 2, a winner takes responsibility. You take responsibility for your own actions and the trades you take. You don't blame the markets. You don't blame the strategy. You understand that you press the button, and because of that, there is risk. You understand that you risked more on that trade because it was A+, and it either works or it doesn't, but you accept and take responsibility for that risk you put on. And you also take responsibility for your own learning and your progression. Number 3, a winner understands that perfection in trading can never be achieved. The longer you're trying to chase perfection, trying to solve and crack the algorithm, the longer you're going to be unprofitable for. Instead, focus on something that's repeatable. Number 5, a winner focuses on self-improvement, right? You focus on getting better every day, understanding yourself more, how you trade the markets, and external things, guys, will impact your trading. If you're not an organized person, if you've got a personality that promotes gambling or over leveraging or anything in life, risk taking, that's going to show in your trading, and that's something that you need to manage personally. Focus on self-improvement. Next one is a winner is satisfied with enough. A winner will take what's there and they'll move on. You're going to be satisfied with enough if you're going to win. Next one, a winner understands that risk needs to be taken in order to reap rewards. You have to risk to get the reward. Without risk, trading's not for you. If you can't stand the thought of losing a funded account, if you can't stand the thought of losing 3 trades in a row, 4 trades in a row, and you can't come back to implement your model, you need to go back to the drawing board because trading is not for you. Second last one is a winner is able to reflect and move forward. You reflect on your losing trades, but if they follow your model, that's it. You reflect for 20 minutes and you move on. You do not need to fix anything. If you take a trade that doesn't follow your model, you also reflect for 20 minutes and you move on. The more you dwell, the more things won't work out for you. And the last one, which ties into all of these, is a winner submits to the process of time, the process of learning, of slowly getting better and better and better and better and better. With that being said, guys, I appreciate all the support. Hope everyone has a great weekend, and we'll talk soon. Keep calm in these market conditions. Obviously, Trump, all these things going on, they'll affect the market, but follow your rules, stick to the process. And if you implement some of these things, these are what helped me. If they help you, let me know, and we'll talk very soon. Peace out.